Hello, everyone, and welcome to another episode of Tax Sale Starters. I'm Carlton Hoskins, and today I have with me Brian Sidesticker. As always, he brings the most insight into tax deed and tax lien investing. Some of you out there may have some experience. You may already know a little bit about tax lien investing, or you may know a whole bunch about tax deed investing. What we want to do is talk about some of the scenarios that you might find yourself in when you're doing tax liens and tax deeds. And we want to answer some of those questions. And Brian's team has been fielding these questions for months. So we want to bring these questions to you all. If I buy the lien at the auction, then it's safe to say that I don't owe any more taxes. Is there a misunderstanding in that? And I bought the lien, so I don't owe any more taxes. I didn't buy the subsequent taxes. I bought this particular lien. I'm in first position. I own the property. I don't owe any more taxes. Is that accurate?
Kind of.
Depending on the state.
Right. How's that for an answer? It really depends, right? It again, yeah, definitely on the state. But I mean, if you bought the lien, right, or bought the taxes, right, technically the other taxes aren't your responsibility. It comes down to what makes the most sense from an investment standpoint. If you bought that lien, right, but somebody else behind, ahead of you purchased a lien as well, they honestly should care more than you. But do you have to? No. But I guess again, comes back to knowing who's ahead of you in priority, and if you can prevent people from going ahead of you, that's always a better option. Or even if you don't care about that, but you're going to earn a better interest and your lien to value ratio is good by purchasing the subsequent taxes, then that would make sense as well. And no, I'm not aware of, again, I'm not an attorney nor licensed in every state, but I'm not aware of any instance where you have to pay those subsequent taxes. It just might make a lot of sense to do it. Are there other fees, fines, taxes that may be due after you end up owning that tax deed? The short answer is yes, there's certainly things. What those things can be varies wildly from, I guess a simple thing would be, you mentioned fines, right? And I call them fines, not liens, because the county or the city may post a fine on your property for not mowing your lawn, right? It's not a lien, it's not recorded at the county level, but it's still due against the current property owner, and it survives the tax sale process because it's not a lien that gets wiped out. It's just a fine due to the current property owner. You inherit it at that point in time. And so those are things that occur even in judicial sales, like in Ohio, where technically you have insurable title, but you could still have these fines that are due that pop up. And are you responsible for them? Yes, you are technically. There's, to go a little further down that rabbit hole. This is a deep rabbit hole. I don't know if we'll get all the way to the bottom of it, but are the other superior liens, right? These are different than fines. These are superior liens, like IRS liens, where they're liens that weren't foreclosed out on from the tax sale foreclosure process, right?
Right.
It's a perfect example. Quite frankly, there is instances where even a mortgage isn't wiped out, and it could be because the statutes don't allow it. New Mexico is a state where mortgages survive. It could be where the foreclosure attorney or whoever did the title search didn't catch a mortgage, and if they weren't notified, then they weren't foreclosed out. That's just reality across the board.
Right.
So that could be something, right? Not to freak everybody out, but these are things you need to be aware of. I guess that kind of answers that question of missed items from the foreclosure that technically should be wiped out. Those happen too. Second mortgages that weren't notified correctly, other liens that weren't notified correctly. So you kind of have three different buckets of items that pop up: things that survive because they technically weren't liens to begin with, they weren't wiped out; things that are liens but they're superior; and things that were liens that should have been wiped out and didn't because the process wasn't followed the way it should have.
Right.
I know there's a lot to unpack there, but I guess the reality is there's certainly things that can pop up. We call things free and clear and insurable title, and there's many cases where there aren't any other fees due. There aren't any other cash that you have to lay down. But there's also many instances where you do. This is reality.
Right.
That thing to
That's
know.
good answer.
the best thing to do is just know what those are going into it. Doesn't mean that it's all bad and all, end of the world by having those. I mean, a $300 mowing fine, big deal, right? But
Right.
Florida, $500 a day mowing fine for 2 years, big deal.
Huge deal. It changes.
Yeah.
That's good. And we went down a rabbit hole a little bit, and I'm glad we did. So hopefully that, again, we're just leaning on the fact of you have to do your due diligence. Going to an auction, bidding your $20,000, $30,000, $40,000 to win a bid, and getting a lien transferred over to you, or a tax deed in Georgia and Texas transferred over to you. This is the simple part.
Mm-hmm.
The research you do before you buy that asset, before you invest in that asset, and what you do after you have it, that's where the work comes in. It never looks complicated until you get into the deal, and then that's where people start losing their shirts. So there's a lot of due diligence in it. So use Tax Sale Resources and get some due diligence done. Don't forget to hit the subscribe button, hit the alert bell so you can keep up with the latest posts and updates from Tax Sale Resources here at Tax Sale Starters.